Hi, I'm Billy Keels, the host of the Going Long podcast. Every week, I'm going to be here interviewing the absolute best in the business as it relates to real asset investing, as well as real Main Street investors. We're going to be having conversations where you can listen in, and that's going to help you to continue on your path to education so that you feel much more comfortable as well as confident in investing long distance. So make sure that you go ahead and subscribe to the channel. Make sure that you're liking it as well, because that way you can get every single episode as soon as it comes out. And by the way, don't forget to leave today's episode a 5-star review. Let's go ahead and listen to today's conversation. Welcome to the Going Long podcast. We're back once again to help to educate you so that you feel more comfortable and confident in investing beyond your backyard. I'm your host, Billy Keels. And you know what? If you've ever wanted to figure out how to go from managing a small portfolio with family members to having over 192 units in your portfolio, and doing that in just a couple of short years while living in Thailand, then guess what? You're going to want to listen to this entire episode, because today's guest not only started out with 10 units in their portfolio with family members, also got into fixing and flipping, and has gone and elevated up to apartment complexes over 192 doors. He's also a father. He's a husband. And he is also an analyst for Boardwalk Wealth based out of Dallas, Fort Worth. And he also is the podcast host of Real Estate Journeys. And I'm really excited to have this conversation today with my good buddy, Matthew Baltzell, AKA Matty B. Matty B, what's up, man?
What's up, Billy? Thank you for having me, man. I love that intro. The intros are tough sometimes, right? You're like, I gotta get it out.
Here we go.
Get to that combo. No, you did good, man. I love it. I'm glad I'm here.
Well, thank you very much. Look, I'm excited to have you here, to have a conversation with you and have people around the globe learn from you. But I always like to start out every conversation kind of with the first two questions, at least kind of keep it consistent that way, right? Mm-hmm. And Matty B, can you do us a favor? Let us know, what city in the world are you in right now?
Currently, I'm in Chiang Mai, Thailand, or most commonly known to Westerners as Chiang Mai, Thailand.
All right. Got you. Wonderful. I like the pronunciation as well. Both pronunciations. Yeah. Matt, what's the best, most positive thing that's happened to you in the last 24 hours?
Well, it's actually kind of, I don't know, a double negative. Our gym recently opened up 2 days ago, and I weighed myself, and I weighed 82 kilos yesterday. And it's the most I've ever weighed in my life. So I'm like, all right, like, need to get on it, right? And so, I had a good workout yesterday, and then I went and weighed myself today, and apparently it is another 1.3 kilos. So now I weigh 83.2 kilos. And the good news is that now hopefully the weight gain has stopped, because I've went and bought a bunch of veggies, and now I'm going to be back in the gym. So that is the most positive, sad, depressing thing that has happened to me today. So now I know. So now I can move on.
You got the checkpoint. Now you know what to do.
I got the checkpoint. I'm like, I'm not going higher. I'm going lower. So
isn't it crazy?
Do not check back in on with me. Hopefully I can get this down.
Isn't it wild when you've been in the house for quite a while? Like, these kinds of things can happen. Yeah. So we're all going through it. We're all going through it. Listen, man, so a lot of things I would like for us to be able to share with the audience. Sure. And first and foremost, I highlighted a couple things, but look, Matt, you are where you are in your life. No, starting out in Colorado, which my brother and sister were both born there as well. It's one of the things I remember from speaking with you before. Mm-hmm. And just help us get an understanding of, like, what are some of the major milestones that have happened, some of the decisions that you've made, which also led to you being in Chiang Mai. Did I pronounce that correctly?
Yeah. Chiang
Mai. Okay.
Yeah. Yeah. So so to give you a quick rundown, so how I wound up here, I left the States back in June 27th, 2016. And I was going to move to Berlin, and I moved there, and I thought, I don't know. I just thought it was going to be more grandiose, and I was having problems with my visa, and I was just like, okay, like, what's my next move? So I wound up coming to Chiang Mai I came to Thailand first. I came to Thailand in Isan, which is like northeastern Thailand. And I came to start teaching English because I wanted to experience Thailand and stay at a place for a little bit more. And as I was, thinking about my next move, like when I go back to the States, like what do I kind of want to start getting into? And I wanted to get involved in commercial real estate. And I was like, okay, like, but I don't know when I'm going back. So how do I go about doing this? In the meantime, I wound up meeting my wife, who I've been married to for about 2 years now. And we just recently had our first child.
Congratulations.
Yeah, thank you. So, but while we were living together, I decided, I have to get creatively, right? So I was like, all right. So I started reaching out to people on Facebook. And people are like, oh, you want to invest in condos in Thailand? I'm like, no, I want to invest in America. And they're like, oh yeah, go to America. And I'm like, okay, yeah, like that's great. I don't know, like I'm kind of in this relationship, like I don't know what's going to happen. So I created a digital meetup on Bigger Pockets, and it was back in the States, and it had anywhere from 6 to 10 people in on a week. And basically we just I was going to say a cuss word, but I won't say a cuss word. We talked about real estate and, helped each other out. And in the meantime, I had somebody that was following my progress, and she's a mentor to me right now. And she didn't join the group, but she just said, hey, I like what you're doing. Let me know, keep me up to date. And, I updated her 1 month, 2 months, 3 months. And about the 3-month mark, she said, I really like what you're doing. Why don't I put you in touch with somebody that I know back in the States? And it's Omar Khan. He's the CEO of Boardwalk Wealth right now. And he was just getting his company off the ground. I started helping him, and he started he asked me to start developing like a broker list and reaching out to brokers in Corpus Christi. And I was thinking like, why are we going to Corpus Christi? Like, okay, whatever. And so, and then I just did one thing, and then I did another thing, and then I did another thing, and then I did another thing. And he's like, all right, like you just like, let's partner up, start working together. And I was like, sweet. And I mean, I'm doing this in Thailand. He's back in the States. We have other boots on the ground in Florida. We have properties in Atlanta, properties in Jacksonville. So yeah, that's my kind of a quick rundown. And now I'm, working, helping managing the assets, and, just loving life and trying to scale up during this COVID-19 and see how everything shakes out.
Yeah. So there's so many things that we can unpack just from that small piece of what you just told us. And I relate to a lot of things that you talk about as well, right? And understanding having the trip overseas and falling in love, having the children. My 1 year sabbatical, I always joke, has now turned into 19 years, 3 countries, a marriage, and 2 kids. So you want to make sure you have as much fun as possible on those 1 year sabbaticals that could turn out.
Why do you think I follow you on Instagram? Right. Because now I see what my life is like, right? I'm like, okay,
projecting in the future.
Foreshadowing.
This is it.
Like, what's he doing on Friday? What's he doing on Saturday? This is it. When's another kid coming? Okay.
Right. During COVID, it would here in the flag. But now listen, so a couple of different things. Like one of the things that Matt, I like about you, we talked about this before. There's so many people that look at real estate and say, okay, well, look, real estate is what I want to do to become the next billionaire, or whatever, right? Because there's the 80% of the wealthiest people in the world with real estate, et cetera, et cetera. Now, I know that you have a different take on really what you want real estate to be able to provide for you and your family. Maybe you could talk to us a little bit about that.
Yeah. So, a lot of people, right? I was in a mastermind group, and this one gentleman was like, yeah, I want $1 billion portfolio. It seemed like almost like I don't know if his name is Jordan Gecko, right? The guy from the Wall Street movie, right? The slick back hair, just like, yeah, I want $1 billion portfolio. And I was like, oh, all right, like, that's kind of cool. Like, why do you want $1 billion portfolio? And it was just like strictly like a numbers game for him, right? Yeah. And I was just like, oh, like it's just kind of like, it's just left a taste in my mouth. And not that that's a bad thing if you want $1 million or $1 billion portfolio, but for me, right, real estate can help alleviate a lot of stress in your life. It can help generate passive income. It's good as far as leveraging for assets is concerned. If you own $1,000 in stock, you own $1,000 in stock. If you own $1 million property, maybe you put 25 to 30% down, right? So, there's a lot of beauty within real estate as far as like leverage, having a tangible asset. For me, I think it's helped, alleviate, my financial situations and start taking me to the next level. And, people that I'm partnered with, they have more money, but I could see the future and I could see how they're leveraging and working and shaking and baking within the system. And I think once you start to actually see it, or somebody, that really opens up your window. Because if you're listening to this and you're in Europe and you're thinking like, I don't know anybody in America, like, why would I invest in American real estate, right? And I think people think a lot more locally, right? They think like, oh, I live here in this small town, 100 kilometers away from Barcelona, property value is not good. Like, I don't want to do this, I don't want to do that. And I think, like a lot of your audience probably has the traditional retirement accounts, maybe a property, maybe they don't have a property, or the house is their biggest investment. But I think once you kind of start, meeting people within the financial sector or different investment realms, it kind of opens up your world to more of a bigger world of where you can invest outside of Europe. You can invest in the United States, and really kind of open up your horizons.
Yeah, definitely. And so one of the things, and it's just to bring this home, right? You're right now in Thailand. You're working with and managing assets for a company that has its base in Dallas, Texas, right?
Correct.
And you also have assets in multiple states. You maybe give us an idea of kind of where those states where the assets are actually located?
Yeah. So we have two properties in our portfolio right now. We have one in Jacksonville, Florida, which is northeastern Florida, maybe 100 kilometers from the Georgia border, which is another state, or you might say province. And then in Georgia, we have another property in Atlanta, in a city called Fayetteville, which is about maybe 100 kilometers south of Atlanta. But we traditionally usually invest in our portfolio. We invest in landlord-friendly states, which is, you could say like Florida, Texas, Georgia, Tennessee. But I mean, we're not invested in Tennessee. But those are just a few examples. Ones that are not landlord-friendly would be, California, New York, Chicago, or Illinois. So that's where we traditionally invest. But a lot of people invest in different states. It's kind of just up to your strategy, what you're kind of targeting, whether you're fixing and flipping, whether you're focusing on retail. But for us, traditionally, we focus on apartment complexes, which are typically between 1 to 200 units. I don't know if that's as common in Europe, big apartment complexes, but
not so much.
Yeah. I didn't think so. But yeah, that's kind of where we've been investing.
Okay. And then, so one of the things when you talk about the apartment complexes, right? Because you've done a number of things, right? You had single family residences, you've done the fix and flip thing, and you decided to go and be in the multifamily space specifically. Like, this was a clear choice for
sure.
you. Help us understand why that is the place for you to invest your time, energy, and effort.
Yeah. So basically with multifamily, you have economies of scale, meaning that, when we started out, my mother and I helped manage 10 single family homes as far as the portfolio is concerned. And, you got to do heavy labor intensive, right? You have one tenant, you have one property, they move out, you got to go in, fix and flip, you go in, you buy it under market, you flip it, bring it up, and then you sell it, right? So it's a lot of labor intensive. Now, if you have, let's say, 10 separate units, you have 10 separate contracts. Now, maybe you start thinking a little bit bigger and you're like, listen, what if we went after, let's say, 100 unit complex? Now, it's maybe going to take longer. You might have to do more diligence. But at the end of the day, it's going to be one contract, right? and it's going to be multiple little contracts within that, but it's going to be one contract, right? And so now you have 100 units as opposed to 10 separate things and blah, 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 right? And you can always say the old adage, like if it's under, maybe it's under 2 separate roofs or it's 4 separate buildings, right? But to me, it made sense. It was easier to see that as opposed to like, okay, small potatoes, go back, get one property next year, maybe get another property, 3, 4. And I'm at a point in my life where it's like, okay, I'm trying to like provide for my family, get my career, my real estate career, like up, going, running, and not dilly-dallying with 1 property, 2 properties, 3 properties. Not that there's anything wrong with that if you want to go that route, because there definitely is lucrative money. But I wanted to start playing with the bigger boys for sure.
And Matt, would you also say that has something to do with like, so when you got started, you were looking to actually invest your capital and look for it to grow, right? As you said, you're moving in another phase of your life. So when you're looking for to place capital, and maybe you like what you're doing during the day, it can reduce some of the risk, right? Because if you have a particular property and it goes vacant, then that property is 100% vacant, which means there's 100% no cash coming in the door. When you're using capital to invest in an apartment complex, let's say, you're investing in something that actually spreads out the risk. So even from that perspective, it could be something that would be interesting.
For sure. Yeah. And I mean, with all the properties that my mother and I had, we basically had to liquidate our whole portfolio because everybody stopped paying rent. This is back in around 2008, 2009, and people stopped paying rent. And, my mother, bless her heart, like, you start having 4 tenants and you have 4 houses and they don't start paying. And then you're like, I'm floating these for, 4 months on end. And if the other 6 properties are cash flowing, 3, maybe 400, between there, now you're paying the whole mortgage. Like, it's very cumbersome, and you got to make some decisions of like, what do you really want to do? And so so we had to liquidate our portfolio. So that kind of stuck with me as far as like, seeing my mom and I get like burned out and then be like, all right, if you have 100 tenants at and they drop down to 80% occupancy, like, where do you do the underwriting of like your stress test? Like, are we still going to be good at 50 units? Like, okay, like we're at 80. Okay. We're in the positive. Like, we're doing well. We're still cash flowing. We're not maybe at our 90 or like, our honeymoon period, but we're at 80. So as long as there's no COVID times 5 or great depression, we should be good.
And actually, and that's another great talking point here, because you're talking about, you just said something, stress test. So I want to pivot just a little bit. And I know earlier I talked about analysts, but I guess the biggest thing is really investor relations, right? And that's what you're doing with Boardwalk Wealth right now. And so when you talk about stress tests, because this may be a new concept for some people, I know that that's part of due diligence. Help us understand what you're talking about in from that perspective, and also what that would mean for someone that's potentially looking to invest with someone else.
Yeah. So basically, in like layman's terms, a stress test is like, think of it like if you have a ship, right? Or a submarine and it's going down. It's like, how far down could the submarine go before the walls completely cave in, right? Mm-hmm. So when you're underwriting, you're doing your underwriting, you can say, if the economic vacancy, which is, if we're sticking with the example of 100 units, it could be 90% occupied, but only 80 of those 90 tenants are paying their rent, right? Mm-hmm. So you could be like, okay, so all right, we're economic, we're at 80, but we're actually physically occupied at 90. With your projections and everything, as long as economic occupancy does not dip below 55%, we will be in the cash flow positive. Anything below that will be in the red. So that's kind of like a stress test. And, you could do that with any, financial vehicle or your investment criteria. So you could say like, listen, I'm heavily invested in Uber, all my money's in there. As long as Uber does not break below, $9 a share, like I'm not going to lose any sleep. If it goes below that, now the wheels have come off, and that's like my stress test. That's my my break even point. So you can, you can allocate that to different asset classes.
Okay, perfect. And that's one of the things that when you're looking to either you're managing your own assets, or you're looking to acquire a new asset, or you're looking to even invest through other people, those are some of the types of questions that you should ask. Understand. It's interesting you just said
sure.
that the economic and physical occupancy. I was just talking to one of my coaching students the other day, because and I love that you talked about that, because there's so many people that talk about occupancy, but there is a very clear difference between who is physically in the building and who is actually paying their rent and paying it on time, because that affects your cash flow and your ability to operate effectively. So
and I think to piggyback off that real quick. So if you're listening to this and you're thinking about trying to get into other investments or getting into real estate, you are going to really want to vet your financial advisor, your syndicator that you might invest with, even your own CPA. You're really going to want to vet these people. And one of the good things that, like, listening to your podcast and other podcasts in the investment sector, right, is people start saying like little tidbits of like, you're like, okay, stress test, like write that down, like economic occupancy, physical occupancy. And if you're thinking like in real estate, right, you should be able to ask people these questions. And if they're not able to answer them, or they're like, oh, like our occupancy is at like 95, you're like, oh, that's great. Like, what's your economic vacancy? Oh, it's 75. Like, oh, what kind of neighborhood are you in? Right. What asset class is this? Like, where's the neighborhood? And and if you don't know, like, you should kind of know those answers, but they should definitely know those answers. And if they don't, assuage you and make you feel better, you should not invest with them, especially if you're living abroad, because trust is the number one thing. And if somebody doesn't have trust and they can't answer your questions, don't invest with them, whether they're 100 kilometers away or they're across the pond. Don't do it.
So I just want to reiterate what Matt just said, because it's gold. Make sure that the person that you're speaking to can make sure that they are able to convey the idea in a way that you understand it. If they can't, run. Because the name of the game is trust, right? And so, you can't say it any clearer than that. So if they are not able to, and I don't necessarily mean that specific person, but that person or their team is not able to clarify things in a way that you understand, then it's kind of
I mean, execution is key, right? I mean, execution is key with anything. I mean, look at all the businesses that fail. Everybody can create a business plan. People can blow smoke up the wazoo. But if you're not executing on your business plan, like, how do you plan on executing your business plan? Like, I understand that you're going to, value add and you're going to do 35 units, but like, who do you have on your team? Like, what is your track record? Like, how are you going to do this? Like, now, right now, example being, a lot of people in the multifamily syndication space didn't conservatively underwrite. So what the typical model is, they go in and they say, we're going to rehab 30 of those 100 units, right? So, and the typical turnaround period is anywhere between 3 to 5 years. But what they want to do is do it within the first 3 years, because that's where they can write off for a lot of the tax incentives and whatnot. So they're about a year into the plan, and maybe they've done like 10 units, 15 units, who knows, right? And then all of a sudden now COVID hits. Well, they didn't conservatively underwrite. They didn't do a stress test enough. And now they were going to renovate these units, and now they're kind of getting caught with, okay, well, we can't hire people to do the renovations, and now we can't bump the rents. So now we're kind of looking to sell the property. So, when you are an investor, you can ask for questions like this of like, have you planned for a pandemic, moving forward? And if they say no, how comfortable are you with that? I mean, a pandemic's a pandemic. But if you would ask me that question 4 or 5 months ago, I'd probably say, no, we didn't. We wouldn't. But now, it's like, what do you feel comfortable with? And if they can't answer those questions, then, so be it.
Another thing. So on that question, so what are you doing differently, right, because we're having these conversations with people all over the place, and that I think about it during the day and during my day job, right? There are things that would happen in contracts that we never saw before. Same thing is happening in the real estate, and things are happening with investors that are now asking different types of questions. But specifically, when you start looking at underwriting deals, stress testing deals, what things are you doing differently today that you weren't doing 4 or 5 months ago?
I would say nothing, because we have the guru, the oracle, Omar Khan, as an underwriter, and he's like very good with numbers, and he underwrites very conservatively. And so we're not going to blow smoke up your wazoo, right? And so we raised extra cash. So we have extra cash reserves. So a lot of people right now, they are freezing their distributions. So basically what that means is if you gave somebody 100,000 euros and they promised you a 6% preferred rate on return on your money, so you'd get 6,000 euros every single year, break that up into 4 installments, blah, 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 blah. Well, a lot of people now are saying, we are going to freeze your distributions for, I don't know, this quarter. This quarter until COVID gets through, and basically we could just sit on our cash because they don't know what's going to happen. They don't know who's going to, and so we are still doing distributions because we conservatively underwrote. Now, I know some of your audience might be thinking like, hey, I'm sitting on cash. I'm trying to look and I'm trying to jump into something like this is hot, that is hot. I think it's very important for people that are listening to podcasts like this is to gain the financial education, because, I heard somebody say once that once you are well-versed in an asset class or an investment, you have stronger legs to stand on. So if your Uncle Lou walks in and it was like, oh, a tornado's going to take out, blah, blah, blah. You're like, dude, yeah, let's go, man. Like, that's great. That's a great opportunity. I know that area. Like, he's like, what? No, you should sell your property. It's like, look who you're taking your investment advice from. So,
right.
The stronger the legs you have to stand on, the more firm you're going to be. And so, for us, like, having cash extra in reserves is okay. If you're having cash and you're looking to, jump in and place it somewhere, don't be so quick. The market might shake out, like, especially, I'm even guilty of this too. You see the stock market going like up, 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 up. And then it's like, oh, like, yeah, but the unemployment numbers just came out again. Like, this is bad. This is bad. This is bad. And it's like everything's like a lagging indicator, right? You don't go to the gym once and do like 2 reps and you're like, dude, I'm jacked. Right? You do it. And then all of a sudden, like 8 months later, somebody looks at you and they're like, yeah, you're looking kind of good. It's like, yeah, I've been in the gym for 8 months, it's like, okay. So, it's okay to be sitting on cash, but really just educating yourself, I would say is very key.
So that is cool. Getting ready to kind of wrap things up, but you just talked about team, and it makes me think about a couple things that I've seen recently. And we're at a point. There was this guy who used to play basketball. Mm-hmm. Name was Michael Jordan. Mm-hmm. And there's this mini series that's out on him right now. This documentary, it's called The Last Dance. Mm-hmm. Talks about team. Mm-hmm. And I know you have a very particular thought about members of the team. Michael won all of the awards, and he won the 6 rings. But there was also another guy who played right alongside him, and he also had 6 rings. A guy named Scottie Pippen. And they talk about this relationship in The Last Dance. And I know that you also have a particular feeling on teams, team members, and being able to work together to win championships. Mm-hmm. Number one, I'd like to get your thoughts on that. And then I'm going to ask you a second question as well. It's really difficult to find Scottie Pippen. If you could give any piece of advice to anyone to find the Scottie Pippen, what would that be? Sorry to throw 2 questions at you at once, but.
No. I think I got the questions. So if you're trying to find a Scottie Pippen, what would that advice be? Is that the first question? Yep. Okay.
Well, it's the second question, but you can answer that one first.
Okay. Yeah. So if you're trying to find a Scottie Pippen, first off, you have to know who you are, right? Like, I mean, if you're a scorer and you're like, I need somebody to, be on the blocks and get the boards. And then you're like looking over here and you're like, this guy's a scorer. And it's like, okay, well, you're like, he might fit well on a different team, but will he fit well on your team? And so I think you have to really know who you are. And then you're able to see how other people could possibly fit into your team. And that could be your Scottie Pippen.
Gotcha. So have you understand your team, recognize what it is that you need, and go out looking for that. Then coming back to the first question was just your concept in team play, because it's something that I think is a real game changer. It's something that also helps you and the overall team go out and be in a position to win championships.
Yeah, for sure. So I don't know if I said this analogy, but I maybe said the analogy to you. Like, I was like, I don't mind being Pippen. Did I say that to you? Yeah. Okay. Yeah. So I was like, yeah, like I don't mind being Scottie Pippen. Right. Like, I mean, Omar started the company, like he does a lot of heavy lifting. He's going to make a lot more money than I am. Like, and I know that. Like I'm okay with that. And, I'm watching the same documentary too. And Steve Kerr, like I'm on the second to last episode, but Steve Kerr was like, yeah, I get 11 shots a game, like, but they count and they're more magnified because I only get 11 shots. Right. But he still won. Like he's still in the documentary. He's still on the team. He's still giving the speeches at the parade. He's still making some money. Yep. And, I don't think there's a place and a time to be, the number one alpha dog. And, maybe in the real estate sector, like at this point in my life, I don't think I want to be, but will that change in the future? Maybe. But, if I'm like, running a marathon and doing some other stuff, like maybe I'm perceived more as the alpha dog, and like Omar and like other people would be like, oh, like, yeah. Like this is the guy. And so, I think probably everybody's the alpha dog in their own little realm. But, as far as like real estate is concerned for me, like I don't mind being Pippen. Like I'll take my rings. I'll give my speeches. If I can still travel, if I can have more free time and more openness to do the things and be passionate and see my children grow up, that's what I'm about. And I'm not saying Omar is not about that, but I know with less of I should say I know where my role is, and I'm okay with that for right now.
Yeah. And I think that brings it kind of full circle. One of the things we were talking about in the very beginning is that you're very clear on what you would like real estate as an asset class to be able to provide you. It's not always about having the most money, because that's one of the things that real estate can do. It can create a lot of cash flow. It can create a lot of appreciation. It can do all of those things at the same time. And one of the things that is that I really like about what you're doing is you're allowing that to create the lifestyle for you, for your family, and you're also sharing that with other people. Whether it's you're mentoring, coaching people, you're sharing it through your podcast, because not every single person needs to be the one who's going out to make $1 billion to feel and be successful in real estate. There are lots of different ways that you can do that. And that's another reason that you and I both love this particular asset class. So thanks for tying that back in really well. So, well, listen, man, I mentioned, like, I would just sit here and talk to you forever. But I guess we kind of have to get ready to wrap things up, but I never wrap it up unless, I don't ask the going long final 3 questions unless you tell me you're ready for me to ask you the going long final 3. Are you ready?
I'm ready. Let's do it.
All right, cool. You already talked about it before. You've already had a chance to live in Europe. So I'm just curious, what is your favorite European city, either you visited or still on your bucket list?
I'm a mountain guy. A place that I've visited is Lake Bled in Slovenia. Okay. That was just a really beautiful moment in my life. And when I was there, it was fall time, and I don't know what it was, but I don't know. I think it was like one of those ends where it's like on the back end of a tourist season, right? And it was just like a weekend. I don't even know when I was there. And they're like, oh yeah, like usually there's so many people walking around the lake and all this. I'm like, wow, nobody's here.
You get it to
and
yourself.
It was so it was so peaceful and serene. So I would say that's one of my favorite European cities that I've visited. I loved it.
Okay, Lake Bled, awesome, in Slovenia.
Yeah.
Question number 2. Sure. You're a successful person, professionally, personally, and that means you've probably made I'm going to guess a mistake or two, probably.
Mm-hmm.
You paid full price for those mistakes. And just curious, what one lesson would you pay forward to somebody else so that they can maybe not pay 100% for the same mistake?
You know, I would say believe in yourself and, never really give up. Like with my podcast, for instance, I've had some trials and tribulations. I'm almost on my 100th episode, and
Congrats.
Now I just feel like, some things are starting to pan out and I'm starting to make it through that dark side because, a lot of things are sexy at first, right? And you're going to hit that wall and you really have to dig down deep and be like, okay, like, am I going to push through? Am I going to make it? And I see the light and I'm almost like, I'm probably past the wall now. And so I would say, that not giving up on yourself, and, you have a brain and what's in between your ears, and you're going to take advice, but at the end of the day, like, you make the decision, right? And
Love it.
Don't give up on yourself.
Love it. Love it. So don't give up, never give up. Lastly, and would like to know, what book are you recommending nowadays?
Yeah. So I'm pulling this up on my phone because I don't want to butcher it. So it's called The Price of Tomorrow with Jeff Booth. It's a very fascinating book. I highly recommend it. Basically just talks about how he sees how deflation would basically be generated from artificial intelligence and technology, and how that's the way to go to solve the future's problems, and talks about, technology, where things are moving, first movers, or first mover adoption. Yeah. Stuff like that. Yeah. And it's just a very fascinating book. So I would highly recommend that book.
Awesome. The Price of Tomorrow. All right, Jay Booth. I will. I'll have to check that one out. I'll add that one to my list of books to read as well.
For sure.
So Matt, listen, man. We've talked about a number of different things. I love the fact that you started out in the state where my brother and sister were born. You had a chance. You made the most of it. You started in Germany. You've then continued to carry on with your dream, fatherhood, marriage. Being able to follow your dreams as well, getting involved in real estate, carving out the space for you in your life and the lifestyle that you want to create, and doing it in a way that makes sense for you. I'm sure you've inspired a lot of other people to go out and do the same, and they probably need a little bit of guidance. They would love to reach out to you, pick your brain, talk to you, find out more about how they can connect with you. So can you do us a favor, man? What is the best way to get in touch with you and your team?
Yeah. So if you want to get in contact with me, you can email me at Matthew, MATTHEW at MatthewBaltzell.com. And that's probably the best way to get in touch with me.
Awesome. Matthew at MatthewBaltzell.com. We'll make sure that we also get that in the show notes. Matty B, Mr. Matthew, it has been a lot of fun. Really appreciate you taking time, sharing with us, and keeping it real as always, man.
Billy, it was a pleasure. Thanks for having me on.
All right, cool. Listen, also too, for the Going Long audience, want to thank you once again for joining us. I'm going to ask you to go out and share this episode and any other episodes with at least 2 to 3 other friends, because we want to make sure that our community continues to grow with other cool, like-minded people that are looking to go out and make a positive impact on the world and on our communities. And want to welcome you. I'm looking forward to welcoming you back to the very next episode of the Going Long podcast. Go out and make it a great day.
Wow, don't you love hearing from top-notch experts in the field? When I was getting started, I really wish that I would have had access to such experts. And even more, I wish they would have given me like a really simple list of things to follow so that I could have gotten to my goals much faster and been much happier even sooner. So that's why I've created for you the 7 things that you should avoid in order to be successful in long distance investing. And you can pick that up really easily by going to billykeels.com/7 things to avoid. And also, if you like today's episode, don't forget to leave a 5-star review. I'm looking forward to seeing you on our very next episode, so go out and make it a great day.